debt. We didn't see asset prices form into bubbles that would threaten the progress of the economy. We didn't see we didn't see a housing bubble. The things that have tended to really hurt an economy and have in recent history hurt the U.S. We didn't see them build up despite very low rates. Part of that just is that you're in a low rate environment. You're in a much lower rate environment, and the connection between low rates and the kind of financial instability issues is just not as tight as people think it is. That's not to say we ignore it. We don't ignore it. We watch it very carefully, and we think there is a connection. I would say there is, but it's not quite so clear. We actually monitor financial conditions very, very broadly and carefully, and we didn't do that before the global financial crisis 12 years ago. Now we do, and we've also, put a lot of time and effort into strengthening the large financial institutions that form the core of our financial system are much stronger, much more resilient. That's true of the banks. I think it's true of the CCPs. We want it to be true of other non-bank financial intermediation markets and institutions. So I think that's monetary policy should be, to me, provide for achieving our macroeconomic aims. Financial regulatory policy and supervision should be for strengthening the financial system so that it is strong and robust and can withstand the kinds of things that it couldn't, frankly. And we learned that in 2008, 9, 10. This time around, the regulated part of the financial system held up very well. We found some other areas that need strengthening, and that's what we're working on now.
He's been very consistent here, trying to make it so clear that we're not going to see this permanent inflation. We're just in a low interest rate environment, and that doesn't mean we're creating bubbles.
Between the persistent pandemic unemployment and the expected increase in inflation, does the former offset the latter to some degree?
I'm sorry, could you repeat that? You broke up there for a second.
Oh, no. I was hoping that wouldn't happen. Can you hear me now?
Yes, yeah.
Okay, great. I was asking if you could talk to us a little bit about the relationship between the persistent pandemic unemployment and the expected increase in inflation. I'm wondering whether the former offsets the latter and to which degree you guys are monitoring this.
You're asking about the relationship between unemployment and inflation? Is that the question?
Yes, exactly.
That was really complicated what you said.
Each other, the persistent pandemic unemployment.
Yeah, I think I'm hearing you correctly. So I would say a couple things. There was a time when there was a tight connection between unemployment and inflation. That time is long gone. We had extremely low unemployment not extremely low. We had low unemployment in 2018 and 19 and the beginning of 20 without having troubling inflation at all. We were at 3.5%. We were bouncing around with unemployment 3.5% to 4%. And it wasn't just unemployment. Participation was high. Wages were moving up. It was a very healthy thing. And we didn't see price inflation move up. There is a relationship between wage inflation and unemployment. But that has not, what happens is that when wages move up because unemployment is low, companies have been absorbing that increase into their margins rather than raising prices. And that seems to be a feature of late cycle behavior. So we're not when we seek to achieve low unemployment, high levels of employment, which is our mandate. We think we have the freedom to do that based on the data, without worrying too much about inflation.
Late cycle.
Thank you. Going to Greg Robb.
Any guesses on what he means by late cycle behavior? I'll explain that later part, or the other part about absorbing into margins later.
To follow up a little bit, I understand what you're saying about the dot plot and the message you're trying to send with the dot plot, but does the same apply for the taper tantrum? You've said that it's going to take some time to get some fundamental progress on your goals, but it seems like some time could now be any time.
So we've said substantial further progress. Now, if you go back November, December, and January, progress in the labor market slowed very sharply. So you had an average of 29,000 jobs per month. If you go back and look at the level of job creation before that, it was very, very high, very high. So we weren't making any progress on the labor market from November through January. February, we saw a nice pickup, a good job report, 379,465 private sector. So that's good. It can go so much higher, though, and it would be nice to see, to really make faster progress. That's different from substantial progress. We'd like to see it be higher than that, and I think it will be. That's the expectation. Is you'll see now, I think, really strong job creation return. Not as high as it was in the very early days of the recovery, the reopening of the economy, but nonetheless very strong. Okay, so what I'm saying is, to achieve substantial progress from where we are, having had 3 months of very little progress, it's going to take some time. And we don't want to get into, I don't want to get into trying to put a pin on the calendar someplace, because it's going to be data dependent.
Nikki, you're gonna have to come
when
up
we
with
see
something.
when we see ourselves on track to make substantial further progress, we're going to say so. We understand fully that test is one that involves judgment. If you remember, during the global financial crisis recovery, we said quantitative easing number 3 was, the test was a substantial improvement in the outlook for the labor market. Well, what does that mean? Well, it means a substantial improvement in the outlook for the labor market. It meant we would communicate when we thought we had that. This is just like that, in a way.
10-year down to 1.628.
Progress toward our goals. We'll tell people when we think, until we give us a signal, you can assume we're not there yet. And as we approach it, well in advance, we will give a signal that yes, we're on a path to possibly achieve that, to consider tapering. So that's how we're planning to handle it. It's not different really from QE3. And I think what we've learned from the experience of these last dozen years is to communicate very carefully, very clearly, well in advance, and then follow through with your communications. In this case, it's an outcome-based set of guidance, as our rate guidance is, and it's going to depend on the progress of the economy. That's why it's not appropriate to start pointing at dates yet.
Keep it going for the reason Mike Pence says we have hurricanes. You look like the little man on top of
Thank you.
Thank you. Don Lee, LA Times.
Hi, Chair Powell. As you know, households are sitting on a lot of excess savings, and I wonder if, combined with that, you have an unleashing of, pent-up demand. How much do you think that would affect inflation, and would you expect that to be transitory?
And everyone who's forecasting these, what we're all doing is we are looking at the amount of savings. We're looking at, we have reasonably good data on that, and we're looking at the government transfers that'll be made as part of the various laws, and we're trying to make an assessment on what will be the tendency of people to spend that money, the marginal propensity to consume. And from that, you can develop an estimate of the impact on spending, on growth, on hiring, and ultimately on inflation. So that's what we're all doing. And we can look at history and we can make estimates, and those are all very transparent and public, and you can compare one to the other. And of course, we've all done that. And I think we've made very conservative assumptions and sensible mainstream assumptions at each step of that process. And what it comes down to is what I said before, which is there very likely will be a step up in inflation as March and April of last year drop out of the 12-month window, because they were very low inflation numbers. That'll be a fairly significant pop in inflation. It'll wear off quickly, though, because just the way the numbers are calculated.
Not exactly.
Past that, as the economy reopens, people will start spending more, and then you can only go out to dinner once per night, but a lot of people can go out to dinner, and so and they're not doing that now. They're not going to restaurants, not going to theaters. That part of the economy, and travel and hotels, that part of the economy is really not functioning at full capacity. But as that happens, people can start to spend. It's also wouldn't be surprising, and you're seeing this now, particularly in the goods economy. There'll be bottlenecks. They won't be able to service all of the demand, maybe for a period. So those things could lead to, and we've modeled that. Other people have too. And what we see is relatively modest increases in inflation. So, but those are not permanent things. What'll happen is the supply side, the supply side of the United States is very dynamic. People start businesses. They reopen restaurants. The airlines will be flying again. All of those things will happen, and so it'll turn out to be a one-time sort of bulge in prices, but it won't change inflation going forward because inflation expectations are strongly anchored around 2%. We know that inflation dynamics do evolve over time. There was a time when inflation went up, it would stay up. And that time is not now. That hasn't been the case for some decades, and we think we won't suddenly change to another regime. These things tend to change over time, and they tend to change when the central bank doesn't understand that having inflation expectations anchored at 2% is the key to it all. Having them anchored at 2% is what gives us the ability to push hard when the economy is really weak. If we saw inflation expectations moving materially above 2%, of course, we would conduct policy in a way that would make sure that didn't happen. We're committed to having inflation expectations anchored at 2%, not materially above or below 2%. So that's, I think if you look at the savings, look at all of that, model it, that's kind of what comes out of our assessment. There are different possibilities. I think it's a relatively unusual, very unusual situation to have all these savings and this amount of fiscal support and monetary policy support. Nonetheless, that is our most likely case. And as the data come in and the economy performs, we'll of course adjust. Our outcome-based guidance will immediately adapt, we think, to meet whatever the actual path of the economy is.
That was beautiful. That is the best freaking thing. Finally, he took the time to properly explain the inflation's going to be here temporarily. It's going to go away. The interview 2 Thursdays ago, he was a total annoyed prick about it. And the market sold off. And then he's like, crap, I crashed the market. Okay, let me elaborate a little bit better like people are 5. We're not going to see inflation.
And what do you expect them to do to prices just in the short run?
I think it's impossible to say, frankly, with any confidence, but I would expect, it's very possible, let's put it that way, that you will see bottlenecks emerge and then clear over time, and you'll probably see that over a period of time because, really the strong data are ahead of us. You're right now the checks are going out just now, and that'll add to spending. COVID cases are coming down. Vaccination is moving now quickly. The really strong economic data is coming. It should be coming, assuming we stay on this track. And that's when you'll really know where the bottlenecks are. But you can see, though, that these are not permanent. It's not like the supply side will be unable to adapt to these things. The market will clear. It just may take some time. And some of the answer to that may be price. In many cases, it won't be price. You'll see that people are reluctant to raise prices. It's a little bit the story about, the wage Phillips curve does show that as unemployment goes down, wages move up. But companies choose not to try to pass that price increase along to their customers. So you'll see a lot of that here too, I think. Anyway, we'll see. But that's my basic sense. Thank you very much.
Thank you.
Let's do a summary. But wow,
Fed Chair Jay Powell.
That was freaking good. That was awesome. That was so well done today. And he wasn't. That was good. Good job, man. Last time we had Jay Powell, he's a little bit of a something else. All right, let's do a summary. Let's talk about what the HE hockey sticks just happened. All right, give me a second. I'll do a summary here. Good. Alright, we got our summary. Good. Okay, summary. We'll begin at some point. I want to go through everything he said. All right, here we go. Oh my, I have ears. Okay, there we go. All right, we'll start it like it's a new video. Hey everyone, me Kevin here. Oh my gosh, Jerome Powell finally talked to the markets like we're freaking fine. Rather than being a big D that he kind of was 2 Thursdays ago when he's like, look, you know what? Inflation going up, it's part of the game. We want that to happen. We want inflation going up. It's what it is. We're not doing anything. We're not going to do it. We're good. We're not going to do anything about it. That was his attitude 2 weeks ago. What happened? Market? Okay, Jerome, you got it. It was horrible. Finally, the next time Jerome goes to speak, today, he's actually chill. He's Mr. Chill today. And he's like, hey, I'll explain this to you like you're 5. Let me make it very, very clear about expectations regarding inflation and other things. And finally, we get a clear. I mean, look, he's tried to be clear, but he just made it baby-proof today. So, what happened? Okay, first, let's talk about what happened, and then we'll explain everything you said in a nice little summary here. So, first thing that happened is 2 things on the summary of economic projections that gave the market instant confidence. We saw yields come down, and we saw stocks go up. Now, I was expecting the Fed to kind of do the same thing like last time, where they're like, I thought that was more of a likelihood. I also thought the Fed might have said something like, no, we're not changing anything, and the market would have gone down. I thought there was a greater chance of that. I was wrong, and I'm happy to be wrong on that because I don't want to be wrong. Like, I would rather be wrong and the market go up, right? Like, we don't need more pain in the market right now. We've had enough of that for the first quarter here, okay? But take a look at this. We go over here. These are the 2 big changes that we want to pay attention to. The first thing is, if we're going to see this massive inflation, then the summary of economic projections from the Fed would not tell us that, yeah, GDP is going to balloon in 2021. In other words, they're projecting this ballooning of 6.5% GDP. This is a revision upwards in 2021.
Dude, what the hell are you
But if
actually
we
doing? Go
were
look at the
concerned
fucking
about
replay.
like
We just did you like 3 or 4
hyperinflation
times in a
happening
row.
or the economy overheating, then these figures right here in 2022 and 2023, and then going down in the longer run, would not be essentially just like if the Federal Reserve and the board members thought, oh, the economy is going to overheat, this is really bad, and we started seeing GDP projections like 4% or 3% over here and longer run adjustments. If we stay on this path, the GDP is going to explode because everybody's going out and they're spending way more money. They're saying, no, we don't see that happening. We think GDP is going to be stable and it's going to head down. We're going to see a short-term boost and it's stable and it's going to go down. People are like, but Kevin, aren't people going to go out and spend a bunch more money? Fed's like, yeah, people are going to go out and spend more money. But then it's going to take a little bit of time for supply to catch up. We don't think prices are going to go up. We think people are just going to wait longer to get their products, kind of like the chip shortage you see with AMD and stuff. We don't see the actual chip prices going up. We're seeing, resale chip prices are going through the roof. It's freaking insane. You look at resale. Oh, yeah, resale prices going up. The manufacturers are like, hey, that's okay. We'll get through this backlog, no problem. Jerome Powell thinks we're going to see the same thing in other cases. Look, if everybody's traveling, no problem. I guess you'll just have to wait to get your plane ticket, or you have to go tomorrow or a different day on a cruise. It's all booked up. They're not worried about prices actually going up, and they're not worried about seeing GDP overheat. This right here, this one section highlighted on the sheet, in my opinion, was one of the 2 big things that got the markets to go, oh, maybe inflation isn't actually going to be that big of a deal because they don't think the GDP is going to overheat despite rates being at 0.
Good luck, one
It's a
and
good
all.
thing.
Let's have fun.
In addition to that,
Like
the second big thing that we want to pay attention to here is the fact that the Federal Reserve said right here that, look at this, previously they had inflation going from 1.8% to 2%. And that did not align with what the Federal Reserve said. The Federal Reserve has always come out over the past year, maybe not the past year, over the past 6 months, and they're like, we think there'll be a temporary boost in inflation, and then inflation will go down. And people are like, how are you saying that? But then in your economic projections, what you think as a board, you think inflation is just in a linear pattern going to go up.
Oh,
Like, where's the spike and then the drop? Well, maybe now they realize, and as in a consensus, they're like, oh, wait a minute, we should be a little more consistent here.
Yeah, I can do that.
We do
Doesn't
think
matter
inflation's
till
going
the
to go up.
future anyhow.
And
There's
here,
no
you're going to
point
see this
for a
short-term
heat,
bump
just
in
the starting
inflation.
position.
So they're revising their expectation for 2021
safety rating,
up to
no
2.4%
iRating,
average
nothing.
inflation for the entire year is the median projection now
that it
from the
actually
board.
does affect
And then
your
it's going
iRating.
to
You get a lot of
slowly
inflation.
decline. These two
That's not
things
true.
here were basically the Federal Reserve finally
Actually,
going
I
to the
think
market.
you're right.
Look,
Your
we're
safety
telling you
rate
we don't think there's going to be
your
inflation. We're
driver's
telling you we don't think
iRating
we're
doesn't
overheating.
improve. I
We're
think
not
it's
worried
only
about
the
having to
future.
taper bonds yet. We're not worried about having to raise rates yet.
Yeah, that's
Here
the
you
info
go.
I've got.
This is what we
Fuck
think.
off, folks.
This was a
Alright.
big change, number one. We did have a couple
Very
dots
good.
get
Let's have
plotted
fun.
for potential minor rate increases here in 2022 or 23, but nothing crazy. You know, maybe 0.5%, 0.75%, maybe. But Jerome Powell doesn't even think we're close to this. He says it's not even time to start thinking about raising rates. This is just, okay, a couple of board members are like, maybe we should raise rates a little sooner. Who cares? He almost casts this as irrelevant. So what else did Jerome Powell say? Well, this is the part where he's really starting to talk to people like the five, which was absolutely wonderful, which, by the way, is something that I like doing as well, going from talking to like the five audience all the way up to advanced fundamental analysis, and of course, my programs on real estate or stocks, link down below, which you can still use that 38% off coupon code for because we extended the stimulus checks arriving on the 17th. All right, so here's the baby talk basically. So, the big thing in the baby talk discussion has to do with supply and demand. I love this discussion that Jerome Powell had. He did such a good job today explaining this stuff like the five. People multiple times ask him, wait a minute, if we're going to see a bunch of demand all of a sudden come back, aren't we going to see a bunch of inflation? I mean, demand goes up, supply can't keep up, they'll just raise the prices. Jerome made it clear here. He's like, no. And I've kind of already talked about this a little bit, so we're not going to be too redundant here. But he's making it clear, look, first of all, in America, we're really good at adjusting to supply. It's kind of like people are like, oh, gas prices are going to go up. Well, then we'll frack more, and we'll refine more, right? People are like, oh, well, prices of goods and services might go up. Well, then we'll wait, and we'll adjust. Yeah, people are going to spend more for a short period of time, but that's going to be transient. It's not going to be persistent. In fact, Jerome Powell goes deep here in a simple way, and he says, look, for decades,
Adam,
we have been suffering declining inflation for decades. And these are very strong, what he calls inflation dynamics. They're not here today, gone tomorrow. These inflation dynamics, I kind of picture them like big ogre moves really slowly, like, okay, low inflation environment, so good. You know, really, really slow moving. It's not like a little mouse that's like here today, gone tomorrow. It's really slow, these dynamics, for them to change. And Jerome's saying, look, the way the dynamics are right now, pandemic or no pandemic, we're in a low interest rate environment. And he multiple times throughout his conversation said, look, we've had low interest rates, near basically zero interest rates for the good part of the last decade here. We haven't seen bubbles created. We haven't seen valuations go to insane levels. Sure, they might be historically high, but we haven't seen insane bubble economics. We haven't seen household debt go up. We haven't seen business debt go up, leading into the pandemic. Sure, we've seen some debt go up after the pandemic, but not to unsustainable levels. Jerome was really, really positive about the state of our economy. Jerome Powell further said that they were going to continue to make these bond purchases until we make substantial further progress. But the big thing that he really said, like he was talking to 5-year-olds today, was we will make substantial communication, or we will have substantial communication well in advance of us tapering bonds. In fact, he even gave us almost verbatim what he's planning on saying. He's planning on saying something to the effect of, we are now in a position where we're on a path to begin tapering bonds. That's what he told us. He's like, look, we've already got the verbiage to go. We're ready. That's what we're going to say. Not when all of a sudden we wake up one day and go, time to taper bonds. Oh, here's a statement.
This one's going to be, you want to be here at the end.
No, he's going to talk to us well in advance of doing that. So then he talks about how, any of these, this was another big one. let me hit this really quick.
Yeah, the
Supplemental
weather's
leverage
pretty
ratio.
warm
So he was
and there's
asked about
some
this
breeze.
regarding
This
banks.
place
We
is
talked about
gonna
this
slick up
yesterday about
good.
how, in my opinion, the Fed's just going to let this expire. I didn't think that the Fed was going to make an announcement today.
No, the
While
tide's
I was
getting ready to
wrong
come in.
about how clear they were on
Trump
inflation here, I thought we were going to have a
Trump
poopy-doopy Jerome today. We got a really optimistic Jerome Powell today, which was great. Really good. Market positive on that. I was right about the Fed just probably running the supplemental leverage ratio question up to the end of the month because that provision expires March 31st. And he's saying, we'll get back to you in a couple weeks on this, which, surprise, surprise, that's literally what he's saying. And my expectation is on, like, March 31st, or the last business day.
Hey, Six, you got some
They're just
wild
gonna
net code going
Yep,
on there.
we're letting this expire. Like, it kind of doesn't want to draw attention to that right now. My expectation, and
Just
he
want to
was
say
asked
thanks
multiple
for
times about
stacking
that,
it
at
up
least
there,
twice
boys.
about
For
that,
Drake
and he
to
let
not
that
be a
go.
letdown.
Then he was asked, which I thought was a really good question. He was asked, hey, what about
Yeah,
the
Michael,
European
car 6,
recovery?
got a
Are they going
radio?
to slow us down? And Jerome kind
I
of
don't know
dodged
what
that
the fuck
question, but
happened there
basically
on
said,
the
look,
start, but
when the
holy
U.S. does
shit.
well, the world does well. And the U.S. demand is going to help prop everybody else up, so don't worry about it. We're all doing fine.
I came out of the pit
Again,
at
reiterated that
100
asset
miles an
valuations
hour,
are
acting
somewhat
like a tank.
elevated by some
Doing a wheelie
standards,
and everything.
but overall,
Like,
any
yeah.
kind of short-term risks, we're not seeing any. They're not seeing major red
Nate,
flags
you're-
right
you're
now. It's
sort of
all
blinking
focused
in and
on
out, too,
obviously
bud.
getting out of this pandemic and reopening. He was
Me?
asked a really good question about, hey, you know,
No,
if
Nate.
inflation,
Number
and we
4.
kind of thought there might be a question about this. He was asked, hey, well, if inflation's at 2.4 and it's going to go down,
Yeah, I got
you know,
That's
why
the
don't you just
first
leave
and
rates at
second
0?
Lincoln.
Obviously,
Well, if
and
it
he
becomes a
had to
big
dodge this
problem,
question.
I
He
assume
totally
if you
dodged
hit me,
the
it's
question. I
because
thought it
you
was a brilliant
didn't see me,
question.
and I apologize
But
if
he
I'm
says, look,
really
we gave you
screwing
our
you up. Say
guidance.
something. I'll drop
And
to
the
the
guidance
bottom.
is
Get out of the
very
way.
clear
I don't want to mess
that
up the
we
Crips
want
race.
maximum employment and stable
I was
prices.
just letting you know, it was just that one
And
time.
you know,
It was
if we
like
look
right
at
now,
kind
you
of the
just did it
summary of
again.
economic
It's not
projections,
consistent.
we
It's
kind of
just every once
see
in a while.
that
Not a big
potential
deal.
coming right around here.
This
I'll
single
show
file
you.
thing
So we
is
kind of
bullshit.
see stable unemployment right
we had
around
more
the
in the lap, I'd
2022
run out
to
there
the
and tell the
longer
family
run
to get off
right here.
Netflix.
And then we see stable inflation, aka stable prices,
Yeah,
right
really
around
loud.
here. Now keep in mind, when they say stable prices, they don't mean your stocks are stable.
All
They
right,
mean
we got in 2
consumer
laps,
prices
just
are
15
stable.
more
People's
yellows to go.
expectations for what they need to
Dude,
pay
chill.
for, you know, travel and food and computers and clothing, all of it averaged together remains stable. And that's what we're expecting to see between 2022 and the long.
Sorry, Spencer.
Moving on. Very, I have to just applaud Jerome.
Popped a little bit of a wheelie
And I'm not
down
trying
there.
to
It was
shill
weird.
the Fed here. I'm just saying, last time he pissed them off. Then he reiterated this. This was really good. So he talked about unemployment and how the Phillips curve is basically broken. We've heard him talk about that before. There was something new that we haven't heard him talk about before, and that was something that he says about a connection between wage inflation and unemployment. And he
That was
says
my
later
thing
in a
for the
cycle, and this is what I believe he means with late cycle behavior. I believe late cycle means when everyone's starting to benefit from a recovery.
Oh, I'm glad I
It
missed
doesn't
that
mean
one.
the
Shit.
recovery is over or the boom is over or we're in a bubble
That
that's
was
about to
close.
pop.
Oh,
It just means
my
when we're at later
God.
stages in the cycle, you have minorities benefiting just
Yeah,
like
that's what
non-minorities.
off
You
in
have
the
different
fence, and I
sexes
see you in the
benefiting
middle,
just
I
like
was like, I
the
don't
other
know
sex,
where
the
to
opposite
go.
sex, right? Let's be clear here. Women benefiting like men, right? Or blacks and Hispanics benefiting like whites. Just make it clear. It is what it is. And so in a later part in our
Base strokes
cycle,
on
we
the
have
back
more of that
there, guys,
benefit.
catch up.
Like in 2019, we finally started seeing minorities benefit from recovery like whites were recovering better earlier. And so that's kind of what he's saying here. But a neat thing that he says is there's a connection between wage inflation and unemployment. And he says late cycle behavior says companies absorb higher labor costs in their margin. Okay, so what does that mean? Jerome Powell is saying, look, when we get to later stages in a recovery, wages will start going up.
Where'd you
But
go,
we
mate?
don't actually have to see inflation because wages are going up, because
I got it
companies
all
are likely
crossed
to
up
just
in board.
absorb
It
that
is
cost,
infield on
basically
back in
having a
13.
lower net profit. The companies will just eat that
Got it.
rather than raise prices. So the
I'll
Fed
be
believes
trying
that
to crawl
companies
back
are
up there.
very reluctant to raise prices in this environment,
Well, you
that
got
they'd
14
rather
more
take less
crossings
profit,
to
which
do
sounds
so.
counterintuitive, but
Yeah,
it's also
really.
very capitalistic. The reason you would do that is because you want to maintain as much competitive edge as possible. And that's essentially what he's saying here. So, all right, modest increase in inflation. Okay, then he talked to us like we were little children about inflation, which honestly, this was probably the best part. I think I like this part so much, I need to put this up as like a standalone portion. Because this was just like, here, look kids, you like rockets and going to the moon? Let me talk to you about inflation. And it was so beautiful. Anyway, he basically says, yes, there are going to be modest increases in inflation. First of all, that sentence right there is way different from him 2 weeks ago. 2 weeks ago, yeah, we're going to see inflation, but we kind of want to see inflation. Now he's like,
Sorry about that.
we're going to have modest increases in inflation. Those aren't permanent things. Sure, there are going to be short-term bumps, but they're going to go away. They're going to be one-time bulges. And then he goes on to say, like, look, the U.S. supply systems are very dynamic. People open up stores, people produce more products, people open up more shifts in the factories, and we're not going to see inflation or prices going up because of temporary supply problems. And then he reiterated this about inflation dynamics, which we already talked about in the video. And he even says, hey, look, we're going to see short-term bottlenecks, but it's not like supply won't be able to adapt. Such great lines. Oh my gosh, he talked to us like we were a child today. And the market liked it. The market overall liked it. The market overall bumped and stayed relatively bumped, which was very good. We didn't get ugly news today. We didn't get D-bag Jerome. We got really nice. Let me console you and teach you, along with show you these economic projections that reiterate what I'm saying, to finally make you realize inflation's not a problem. Now, the last time I talked about what the Fed said, who remembers this example? Me going, it's kind of like Jerome Powell is annoyed going to his going home to his wife complaining about how people don't understand it, and he kind of came across as like grabbing you by the neck and going, no inflation.
I know.
It was so different today. Today's like, yeah, we're gonna see modest bumps.
Really, it's all
They're
about
gonna
travel
go away. Don't
control.
worry about it. It's like chill today. It was great. Anyway,
I know, that's what
happened.
Everybody's got
And the
to
stock
settle.
market
Come
loved
on,
it.
let's fucking get this thing
Yields
in.
went down. What do we got here right now? Let's look at this. We got the
I got
10-year
3
right now.
pedals. I can only hold 2 of them all the way
still
down
elevated,
at
but a
once.
nice decline after Jerome spoke. So a nice decline here.
You all,
And volatility fell to 19.32. I'll hide myself for a second. Nice fall in volatility. And the 5-year, nice fall as well. So this is good. Very good news. Very good job, Jerome, for being a very good teacher today. Thank you, Jerome. Thank you so much for watching. Get yourself that 38% off. Oh, wait, wrong button. Get yourself that 38% off link down below. And folks, we'll see you next time. Which the next video is going to be in like 2 minutes because we got to do the market closed.
Good morning. Daily Boulders from the mean streets, the Gopnik-filled streets of Kharkiv. Listen, when I was looking on the internet, I saw that outside the city of Berdyansk there was some kind of abandoned town on the shores of the Azovsk. You know all this, don't you? Let's bloody go to wherever we're going.
Goddamn hate. Fuck
Почему вы
you.
говорите так громко, как я дурак? Я слышу совсем, я не дурак. Этого, да? Хорошо, спасибо. Wow, I'm getting abused by the bus drivers of Kharkiv. This is a rough town. This is a rough old East Ukrainian town. Crikey.
Yeah, you about got me.
Check it out. This fancy Ukraine Now bus is going to the town of Wrocław. Wrocław in southern Poland. All these people. Здравствуйте, еще раз.
Very hostile.
That's the guy who abused me earlier, but now he's friendly. That bus there is going to southern Poland and it's taking Ukrainian people who are leaving their families behind, their native town behind, their friends behind, in search of work and jobs and a new life in Poland.
I mean, you said it.
Because that's what you have to do if you want to make a life for yourself. If you're Ukrainian, you probably have to go abroad, unfortunately. There they go, off to Wrocław. Virginia. By the way, just in case you're wondering, there's a list here of things you can't take on the bus. Let's go through them one by one. You can't take a pistol. You can't take scissors. You can't take an old-fashioned bomb from the 1800s. You can't take a dagger. And you can't take an axe.
Yeah, I don't know where the other
If
people
you're a serial killer, you have to take the train, not the bus.
All this talk's gonna hurt somebody's self-esteem.
Believe it or not, we're on a mega luxury bus. Check it
I
out.
don't know. It's not mine. I don't get the bus. I don't have that self-esteem.
Okay, up close, it's not quite so luxury as I was thinking.
Hey,
Once upon a time, it probably was luxury.
Gone. Not in here no more.
Oh, well, that's fucking good. I figured he just went to the pit being a piece of shit.
When I said hello to
Now you're probably making him go kill himself now, talking all this shit about him. He's probably feeling like someone's buried between there. He's gonna go into his fucking closet, grab a coat hanger, and hang himself with it right now. I agree. That's exactly what's gonna fucking happen.
My money's on the belt, not the coat hanger. I'm having so much
there's
fun.
my bus over there, the Dnipro bus. We've stopped off at a random town.
Coat hanger could be like a meat hook.
Krasnograd. We've stopped off in old Krasnograd. Wherever that is, it's a town of chocolates and sweets. Everyone's got chocolates and sweets for sale. Must be some kind of like sweet factory. Anyway.
Impossible
And these
to
are the
pass anyone on the
Krasnogradians.
inside.
What a lovely bunch.
It is when they come down on you.
Well, our
That's what I'm
driver,
saying.
who for some reason has taken an immense disliking to me, I don't know why, is coming back. So I think we're going to jump on the bus and continue.
That tells me I
Another
didn't
3
get into
hours to
them.
Dnipro. There he is. My enemy.
I'm just bringing there heading for the institute.
I don't know what I did to make him hate me so much. All I did was say hello when I got on the bus. He's been staring me out in his rearview mirror ever since. We've got 5 minutes in this little town in the middle of nowhere. And I want to show you something quickly. Got 5 minutes, but there's something up here we need to look at. Check this out. An old Soviet mosaic of a couple of pioneers. See them playing the trumpet and the drums.
Sorry,
A random
Sarah.
find in the village on the way to Dnipro. And there's one more. Check this one out. Quick. Can't miss our bus.
No, you're just driving it in for.
This is where Lenin once would have stood. And over here, look, we've got another mosaic. Woo. 1980 Moscow Olympics. Here in a random village. Here, some Ukrainian. Wow. Something about peaceful and happy children of the
Well, this
planet.
don't get
And there's
fun,
some
fella.
little Ukrainian Soviet kids. Check it out. Whew. All right, let's get back to the bus. Oh, my shoes, they're muddy.
Lead right when that costume came out.
Yeah, I must put third right.
Oh, and before we leave, look at this.
We're all
We've got an
running
old
different lines.
Soviet
Don't be a good
kiosk.
one.
Check it out.
Yeah,
Still
you
left
just
over.
passed me.
Check out the Soviet kiosk.
Oh, let's fucking do it,
О,
boys.
что у вас
Let's run
есть?
these last days live.
Да?
Got free.
А, блин, ну дайте что-то.
I think that lacquer screwed me a little though.
Да? Вкусненький?
Yeah, because I seen it coming from 3
Хорошо.
fucking
Супер.
miles ago. You didn't with it.
Спасибо. Вау, это стаканчик, это советский стаканчик.
Не знаю.
Старый советский. Вау, круто. Хорошо, очень приятно. Спасибо. Wow, a real Soviet man with a Soviet glass. I don't think these nuts are
I
Soviet.
won't. I'm trying.
You're okay, Calvin.
До свидания, советский человек.
Come on.
My Soviet friend in the old Soviet village of mosaics. Oh,
Who's in the 2 car? Oh, thank God we can put him. Well, it's going to be fun.
dodgy over there. Factories. Oh, yeah. Whoa. Wow, they're already, the cars are going mental here. We get into Gopnik town, there's even Gopniks in the cars driving around. Wow, и там, это правда называется? And there's a shopping centre over there, Soviet one, called Pravda, Truth. I'm waiting for the old taxi driver to bring me some change before we can start exploring. Because there's no frigging change in this country. Even taxi drivers don't have bloody change. It's a nightmare, so he's gone to a bank to break it 200 for me. Let's see. Where is he? Это Украина. Значения нету.
Банки, там очередь.
Блин, ну ладно. Спасибо. Well, that's it. We got our change. Let's go for a dodgy street on the left bank of Dnipropetrovsk. Well, it's not very dodgy so far, let's be honest. Just like mums and their kids walking about. And then some parks with like kids on swings. I was expecting some real Gopnik areas. Lots of fake Adidas tracksuits. There's even a flipping coffee shop and a couple of women sitting outside.
Well, I didn't make it all the way back up to you there. I ended up fourth.
This is like not what I was expecting, not what I was hoping for.
One shouldn't detour into the infield. That's the third lap.
Oh, no, there's even friendly people in the window.
Thanks, everybody. Look forward to racing with you again.
What? This isn't the scary left bank of Dnipro everyone told me to be afraid of. Must try harder. Hey, I like the old Soviet shop though. Remont obuv, fixing shoes. Look, if you're Dick Turpin, you can come and get your boots fixed. О, сигарет немного. Да? О, это хорошо, это хорошо. Давайте, купи тогда для животных, хорошо?
Спасибо.
Купи что-то для котики.
Это надо.
Хорошо.
Я влажу выбираю все.
О, 87? Вау.
О, если бы зубы были, я бы еще моложе, а то зубов нету, я, конечно, подсаживаю.
Не переживайте, вы моложе, посмотрим. Все хорошо, выглядит. People are always writing to me and they're saying, Mr. Bald, I want to travel to Russia or Ukraine, but I'm afraid, is it safe? And I'm like, yes, it's flipping safe. There's no dodgy streets in the Ukraine or in Russia that you can't walk down at night because something bad will happen to you. But there probably is in Britain, America. So stop being pussies, get your ticket, come over and start Soviet adventurising. Well, we're at Dnipro railway station. Let's see if we can get a, jump on a train, getting out of here sometime tonight, down to the Azovsky More. Здравствуйте. До Мариуполя сегодня вечером есть место купе нижний?
До Мариуполя? Да.
Да? Дайте одну билет, пожалуйста. Well, that was easy. We've got a ticket for a train, the 8:30 Express, down to Mariupol. From where? Crikey. We have to go further in search of our abandoned whatever we found on Google Maps. 8:30 to Mariupol. Lviv, Mariupol. Let's do it. Здравствуйте. Это вам? Хорошо. Это мне, да. Спасибо.
Кто его знает, что оно там еще дальше будет?
А никто не знает. Но скоро лучше, наверное, не будет.
Да? Сколько лет, наверное?
100.
Не, ну некоторые страны, например, вони ж там як підтягнули животи
И все-таки это самое. А у нас...
Какая страна?
А все в Европе буквально, начиная, я только после войны начал, и та же и Польша, и Германия, это все страны, боже мой.
Да, правда, но
Ну,
там
зато развитие пришло быстрее.
Там не были такая вари,
так.
как у вас есть здесь.
Ну, бачишь.
Варил, и не стыдно здесь. Это жаль.
Well, that's the end of day one on our journey to the banks of the Sea of Azov in search of this abandoned settlement. I'm going to get some sleep, hope that our
The apex predator in action.
Oh, welcome back. I feel like we were just hanging out together. Woo! Wow, Mr. Dromy Powell was nice to us today. That was actually unexpected. I'm happy about that, though. Oh, strap it, you live stream problem causer system, YouTube. I can't blame YouTube. I love YouTube. Okay, well, we do have the market closing. Oh my gosh, I also have to slow down the chat here. Sorry. Okay, yeah. All right, so let's get started into what's going on in the market. All right, here we go. So what do we got? We've got sticks. Obviously, the market has responded optimistically and positively to what the heck Jerome Powell had to say today, the way he treated us like little children, to make it very clear that we are not going to see inflation, and we don't have to even worry about them spooking us with tapering, because not only are they going to tell us well in advance when they start tapering, but he's going to make it very clear by saying, okay, we're finally on a path to consider tapering. But no, none of that anytime soon. Instead, go have fun on the playground, go eat your tendies, enjoy yourselves, is kind of what we got today. It was like kindergarten teacher Powell coming out and give us a big kiss on the cheeks. Anywho, take a look at the market. All of a sudden, we had this reversal. Let's zoom out a little bit so we can see that reversal really take place here. Right at about 2 o'clock is where we want to be looking. So right over here, SOS are running into the close now after that massive spike here on Nano Dimension. Nice run. Clever has kind of been doing good all day here. We've got BNGO, big spike because of this. We've got Link that spiked because of this. GM rallying into the close, absolutely doing very, very well here into the close here. Bitcoin rallying up 4%, now almost $58,000. The airlines were already doing good today, but accelerated their increases here with Jerome's speech and Q&A period here. Held it together very well in Q&A. There were a lot of people in comments I saw. I thought it was funny. All the comments, just cut the stream here. You did your job. Shut the F up and get down. Anyways, pretty good. Virgin Galactic up 3.6% here. Marriott, Tesla now over 700 again. We had a tenuous close yesterday. We were down yesterday, so we're back up over 700 now. Social Capital, Microvision, all booming here. Matterport up again. We were briefly, I mean, look at this. We were at 14. I think we were pretty low today here. period of time. We were at like, what, 14.15, 14.45 at one point today. Gee whiz. We almost got Neo back over 45. Kind of still that child left behind a little bit. Pinterest over 75. There goes that 70 buying opportunity, which we were really close to this morning. We did a lot of dip buying before, so I don't feel bad not buying this morning's dip, because better safe than sorry. We did enough dip buying a couple weeks ago. Churchill Capital, though, even though it moved up into our higher box here, is selling off a little bit into the close. Not enjoying itself after that Peter Rawlinson sort of miss-interview yesterday. Wasn't so good. Really frustrating, that interview yesterday. Anyway, Plug Power recovering nicely from being oversold this morning. We were chatting about that in the course this morning. The potential for it being oversold. It's a company that I'm very bullish on this decade. But we'll see how it is. This is the bell.
To close, take a look at the major averages. The Dow's up 190, a little more than 0.5%, near session highs after Fed Chair Jay Powell's message of support and no change on policy or guidance. The S&P up 1/3%. NASDAQ also rebounding in today's trades as yields come off the highs of the day, up 0.4%. And small caps also join the party, up 0.7% and lead the charge higher on a very strong close on a Fed day, Wilfred.
Very strong indeed, and a record close, no less, for the Dow, and just about for the S&P as well. Welcome to Closing Bell, everyone. I'm Wilfred Frost, along with Sarah Eisen and Mike Santoli, CNBC Senior Markets Commentator. As we just mentioned, the Dow closing up 0.6% or 190 points, close to its session high, and enough for a record closing high. S&P record close as well, up about 0.3%. The NASDAQ up 0.4% itself, though still a little way from its own record. The bottom performing sector was utilities. The best performing sector was consumer discretionary. Coming up, KKR's Henry McVeigh on the Fed decision and which industry he thinks will be a big winner as the market rotation rolls on. Plus, Wells Fargo's Mike Mayo on the big rally in bank stocks that we've seen and the names he thinks will continue to outperform, of course, on a day where yields rose, but did pare back some of their gains following the press conference. Josh Brown still with us and joining the conversation. Our conference board chief economist Dana Peterson and Jefferies chief market strategist David.
I love listening. Hopefully I don't get demonetized from it. CBC is pretty great though. They're pretty cool with people commenting on their stuff, which I think is awesome. Bitcoin just broke $58,000. Let's go ahead and look at the after hours. Pull it over. Woo! What a day. It started out stressful, and we can now celebrate. That's exciting. So NGA still not over 20 here, but pushing back. Did have a rally here towards the close here. After hours up 2%. Tuscan Holdings up 2.4% after hours. In the day, there we go. Pull this out here. Tuscan Holdings actually down almost 4% in the on the day, but recovering here in the after hours. Unity up 1% here. Unity's been doing a nice job of recovering over the last few sessions here as we've recovered from our bottom where we hit that 86 moment there. We've got Enphase 165 also trying to recover, up in the after hours about 0.8%. Express, Coupon, First Majestic, CLII all recovering roughly 0.5% here. Nike, FRX, Marcus Group, Quantum all up about here 0.5 to 0.25%. QuantumScape up in the after hours. Plug Power up in the after hours despite selling off only 7.8%. There was a time we were down 17% on the day with those accounting changes being announced, which were announced yesterday after hours. But anyway, today was really reaction time. It did very well here. In terms of losers in the after hours here, looks like GameStop giving up its slight gains that it had today of about 0.75%, giving up 1% here now in the after hours, though after hours can be much more volatile. We have been somewhat trending down a little bit here on GameStop, but hitting some resistance, which is nice to see. Lemonade at 104, down 2.4% on the day and down 0.68% here in after hours. Tesla, very volatile day for Tesla if I could click the darn thing here. By the way, if you too want to have trouble clicking on ticker symbols, make sure to sign up for Webull by going to betKevin.com/Webull and you get 2 totally free stocks and the privilege of having a hard time clicking on ticker symbols. Just make sure to deposit $100 when you do. Tesla now at 700, roughly even here. We've got a gain of roughly 3.6%. NIO also selling off a little bit here with Tesla, but still up on the day. Churchill Capital also closing down 5%, and also following Tesla and NIO around that 0.25% sell-off here. Gevo actually leading declines here in the after hours. Not exactly sure why. Let's listen to some commentary here from Jeffries for a moment, and then see what earnings we've got coming up.
For them, but again, it's going to be very hard for that 10-year to go up well beyond that if they're pinning the 2-year note at 12 basis points, which they can do. So it's not easy to get a really, really, really steep curve. I mean, we've seen 250 to 275. I think
it just wants to be complicated, so no problem. We will, let's go ahead and jump on over to the earnings calendar here. Earnings calendar. Earnings, whisper, calendar. I think we got some earnings today. Who's Williams Sonoma today? So let's go ahead and pull them up. Okay, let's see what. Oops, there we go. Let's see what we got. So Williams Sonoma. We'll go ahead and pull them up. Who else do we have? Oh, Gevo. Oh, Gevo must have just reported, given that they're falling here in the after hours. So that was probably a Gevo miss. Oh, Sundial today too. Oh my God. Oh, it's the big hype momentum play of Sundial. All right, Williams Sonoma, not yet. Sundial, let's see if they've reported. Pretty sure Gevo has, not yet. Gevo reported. Gevo reported revenue of just $531,000, which is pretty dang low. Let's see, a loss per share of about 15 cents. Adjusted loss per share of about 7 cents. Misses on revenue and misses EPS by 3 cents. What was the expectation? Seeking Alpha here. Oh, they're gonna make me log in, aren't they? Oh no, they didn't. Okay, cool. They actually did not show what the expected was. That's okay. Let's go to financial results. Alright. Well, courses are much cheaper if you use that coupon code to get 38% off. Code HODL. Alright, so let's see here. Street Insider financial results here. Announced plans for Net Zero 1 project to be located in South Dakota. Okay, so got some project going on. Where I want to see the actual release here. Fuel sales agreement. I don't really care. I just want quick numbers here. There we go. Revenue of $500,000 for the quarter. Oh God, look at that. Revenue of $500,000 compared to $6.9 million in Q4 2019. That's horrible. That's really ugly. Loss from operations, $7 million compared to loss of 6.2. Okay, so slightly declining there. And I know they're working on a lot of contracts, so this is not necessarily going to mean that their revenue is going to be that bad going forward. But we were touching on this the other day about how it's possible that companies might want to do this sort of green. I forgot what they called it. Somebody had a phrase for this. It's kind of basically like green virtue signaling, something of that style. And we see a lot of that with like contracts going to Gevo for that, but generally relatively low orders, mostly because you've got really expensive products, Gevo, and I know they're working on getting those products down, which will be good, but I think it's gonna be 10 years before they get to that point. So we'll see. Okay, so greenwashing. Thank you. That was the line. So, the consensus was a loss of 5 cents. I mean, that's not that horrible of a miss. What's CNBC covering? Lordstown.
Alone, no revenue to speak of at this point. What's really of interest here is what they're saying in response to Hindenburg research coming out last week and essentially saying, look, this 100,000 orders, that's fictitious in the words of Hindenburg research. They're not saying a lot. The call starts in a little bit. What they are saying, interest in the endurance pickup truck remains robust. They are working with fleet management companies to secure orders for that truck. Remember, these are just reservations. These are not orders. These are not people who have said, yeah, I'll pay that money that I'm interested in buying the truck. And finally, they are on schedule to start late production of the endurance electric pickup truck in late September. Don't forget, the Lordstown call starts in about 22 minutes, and you bet the comments of Hindenburg are going to be front and center on that call. We'll let you know what they have to say. Guys, back to you.
Thanks so much for that, Phil. We look forward to your reports from that call. Mike Santoli.
Yeah, that's exciting that they're going to start development later this year in September. Okay, so Sundial. Let's see. We are waiting for Sundial and Williams-Sonoma. Both of them have not reported yet. Williams-Sonoma is expected to report at 4:15. Who else is reporting today? Oh, and Sundial at 4:30. So we've got a little bit of waiting to do here. Looks like I missed a couple super chats here. Watch the Fed talk and no one brought up corporate bonds. Can you explain how it's sustainable? I don't get it. Oh, corporate bonds. I mean, so are you talking about like corporate bond issuance where corporations are like, hey, buy our bond and you'll be able to convert that to stocks? And people got a lot of money right now. I think that's what's going on. I mean, maybe clarify your question a little bit, though. Feel free to just go in the chat here. But, yeah, I don't know that corporate bonds are a big focus right now. Corporate debt levels may be a little bit higher, but, a lot of that was really just raising cash to be more prepared for opportunities in the pandemic. Okay, so Sundial 4:30, Williams-Sonoma 4:15, so we got a little bit of wait to do here. Let's take a peek at the sticks. All right, what do we got? All right. Yeah, Givo's not liking this. Givo down 7% here. I mean, a lot of this should have been expected, right? A lot of this was expected. Playboy's up 11%, so somewhat. Oh my gosh. PLBY. Yeah, you're right. 11% today. Minor sell-off in the after hours relative to the gains, but yeah, you are correct. So really, no big losers in the after hours, with the exception of Givo. Let's see here. Yeah, thank you. Love the way you simplify old boring suit language. Love your content. Thank you. Kathy is live on YouTube. I don't believe that. Let me see here. Because you want to be careful, because a lot of those are scams. I don't. Yeah. Live news. Let's see. I went to a private browser. Let's see if this is true or if it's one of the scams. Scam. It's another Bitcoin scam. Like, this is endless. These Bitcoin scams. But these happen because they're profitable, because YouTube doesn't do anything about it. Yeah. Scammer! Alright, so where were we? Okay. We were this is 4 minutes away for Williams-Sonoma, so we'll wait for this. Okay, what else is happening here? Lyft rallied into the close, up about 2%, down about 1.2 and the after hours. GameStop just gave up its gains from the day in after hours. We've got Restoration Hardware up about 1.8 in the after hours. NGA going back to $20 in the after hours here. GameStop, ChargePoint, these guys all up about 0.5%. No, nothing really happening here in the after hours, honestly. I mean, the only thing that's getting smoked is Givo. They're smoking those biofuels. But beyond that, I mean, Clever, 8% today. Great. I mean, this has needed a rebound for a while. Nano Dimension up 777. Great number. GM, General Motors, at 60.53. Nice. I have a little bit of exposure in options to GM, so I'll take some gains over there. Of course, doesn't hold a candle to Volkswagen, but there's some serious temporary hype going into Volkswagen here. Wouldn't be surprised. Oh, GM just hit a 52-week high. I get an alert. Dow just closed above 33,000 for the first time. Wow. That's crazy. Good job, Jerome. Wonder what it must feel like to be Jerome. Oh, what's this? Okay. Yeah, all right. So, yeah, nothing there right now. Okay, so Bitcoin up 4.4% now at 58,000. Airlines up 4%-ish on the day. AMC a little bit. Tesla's still sitting at 700. It's great. Bargain to buy it for. So, yeah, no major moves here in the after hours here. Question here. I'd love your input on ticker FLTV. Drone delivery. Yeah, drone delivery I think is so great. I mean, we know this is going to be a future. What is